Yo, what's going on, everyone? Welcome back to another video. In today's video, I'm going to go over my new scalping strategy that I use to trade London session. Now, ever since I came across the strategy, I rarely ever use the higher time frame, and setups just generally come a lot quicker, and my trading has become so much more calm. I'm doing none of that extra trading. I'm not chasing setups anymore. All you do is sit back, wait, and just relax. And the best thing about this strategy is it just requires a lot of patience, and it's very simple and easy to understand. So without further ado, let's get right into this video. Now, I'm sure we've all gone through that phase where we're looking at the charts, we're scrolling through random pairs that we're not supposed to trade, and of course, you forget and abandon your rules. Now, that mainly happens because you don't have a strategy, or you just don't have the patience or the rule set to follow your set of rules. Now, how do you fix this? The best way to fix this, or the best strategy slash solution that I came across, was by refining your strategy down to the very basics. So what I like to do is I like to basically refine my strategy in such a way where it's easy for a 5-year-old child to understand it. So the more simple your strategy is, the easier it's going to be to follow. But sometimes what traders will do is they have so many confirmations and so many different rules that they barely even follow one to two of them. So if you have too many rules that you're not just going to follow, it's best that you abandon most of them and stick to 3 to 4 rules that you can definitely stick with. So what I do in this situation, or for this strategy, is I have 3 rules that I mainly follow, and those 3 rules are going to be mentioned in the later part of this video. But what is the strategy? The strategy is very simple. All you do is you wait for London session to open, and or before, well, you don't have to wait for London, but we only trade during London session. So you're not trading during Asia, you're not trading during New York, you're only trading through Frankfurt and London. So that gap in Frankfurt and London session, those are your hours for trade. So personally for me, Frankfurt session opens at around 2 a.m. in the morning at Eastern time, and London sessions open at 3 a.m. Eastern time. And I generally stop trading around, I'd say, 6 a.m. Eastern. So I have about 4 hours worth of trading, three, four, five, six, and then of course we have two as well. So if you start trading from Frankfurt and then you end at 6 a.m., that's about 4 hours worth of trading that you can do right over there. And within those 4 hours, or that gap between 4 hours, you have, or you might find a trade. Most of the times I end up finding a trade. So these are my trading sessions, and I don't trade outside of these time zones. Now that simply means if I don't find a setup at 2 a.m. or 3 a.m. or 6 a.m., I don't trade for the rest of the day. That simply just means that there weren't any trading setups that were present that match with my strategy. So I would simply just sit on my hands and wait till tomorrow. So what I do to trade this strategy is I simply have one indicator, and this indicator is called the session and days of the week. So what this indicator does is it provides you with a full label of the Monday price action all the way to Friday and Sunday. So what this does is it allows you to, break down and refine price action to the specific day of the week. So for example, we can see what happened during Monday of last week. So Monday last week was very bullish, and then Tuesday in the beginning was a little bit bearish, but it continued bullish. So that's just the breakdown of the indicator itself. But the actual essence of this indicator is that it provides you with the session of this time zone. So we can see that the current session over here, the example that I'm going to provide you, was Asia session. Now, because I am not a trader who trades Asia session and the pair that I'm trading is not active during Asia, I would simply wait for Frankfurt session to open. And after Frankfurt session opens, I'd make the best move on the chessboard. Now, in this case, we can see that Asia session was clearly consolidative and very bearish without any, momentum, without much imbalance, without much strength or conviction. Now, the whole essence of the strategy is based off the Asia high or the Asia low being grabbed. So I'm sure many of you have seen this overall example where we have Asia session high and then we have Asia session low, and then price action takes out the high and then it reverses to take out the low. That's simply because the Asia session has a lot of liquidity above it, and the Asia session low has a lot of liquidity below it. And usually banks are targeting these levels of liquidity because they know it's going to manipulate a lot of us traders. Now, what's the way to really avoid this? What's the way to not get manipulated? Well, if we avoid trading Asia and we simply wait for Frankfurt session to show us what it's going to do, we can simply avoid those stupid petty losses. And in this case, we've seen that once Frankfurt session opens, there's a huge push towards the upside. Now that price action is just above Asia session, what I can do is I can make my way down to the 5 minute time frame, and after my confirmation is present, so we can see, of course, there's many confirmations. So some people might take this sell just based off of the break of structure and enter right over here with their stop loss at the high. Someone else might set a limit based off of the 30-second time frame, or they might go to the 15 and look for the order block. You could possibly find something right over here and enter right here. So confirmation is entirely subjective, and you guys can choose how you want to decide to enter the trade. But that's practically it. You make your way down to the smaller time frame after price action takes out either the high or the low, and you simply look to find proof or evidence that the market is looking to go down. Now, after you find your confirmation, from there you simply enter the trade, and your take profit will be the Asia session low, because of course after the high is taken out, usually the market will take out the low. And this would have been a beautiful example from yesterday's price action during during London session, and we can see that this trade would have been present 1 hour after London session opens. So if we play this out, you can clearly see that the momentum after price takes out London was Asia was very strong. It does come back up, however, to do a quick second mitigation, but after that second mitigation, we can see that the momentum finally kicked in, and we have that extreme push down, hitting take profit, which was exactly what we were expecting. Now, this happens for the opposite side too. If we take out the Asia session low first, then what will happen is price action will go and travel up to take out the Asia session high. Now, the question is, how come none of us know this, and how come some of us who do know this still aren't profitable even after we try to use the strategy? Well, that's simply because there are also other rules that you have to implement and you have to trade with. So if I simply just trade based off the Asia session high and the Asia session low strategy, I won't generally be profitable. Well, why? Well, simply because there are other concepts that I have to use and apply whilst I'm using this concept. So for example, if there wasn't confirmation on the smaller time frame, we wouldn't have used this. We would have simply avoided this trade, and we would have looked for another trade later on in the session. In this case, we can see that price does take out the Asia session low, but guess what? Price action ends up continuing downwards. And that's simply because there wasn't any confirmation here, and the overall context of the previous price action and the higher time frame tells us that the market is looking to go downwards towards a higher time frame POI, which can be found on the 4-hour. So you can't simply use this just whenever you want. You also have to use different concepts and apply it with this concept. But overall, if you know how to use this with the other concepts that I teach on my YouTube video, then you should be set. And you can clearly see just off of Monday, this would have been a very clean 60 to 1 RR. Now, I'm not telling you you're always going to catch 60 to 1 RRs. This is just something that's definitely possible, right? And as I showed you with confirmation off of the 15-second time frame, this would have been a very beautiful and easy trade to catch just based off of the London session liquidity graph. So if you guys want to learn how to catch more setups like these, then click the link in my bio, make your way to my website, and sign up for the course and join the mentorship program. But without any further ado, I'll see you all in the next one. Peace out, everyone. Leave a like, comment, subscribe, and I'll see you all later.